Good morning, everybody. Welcome to the Mortgage Coach YouTube channel. And today I'm sitting down with Greg Sher, a mortgage executive with NFM Lending, one of our customers for both Mortgage Coach and Sales Boomerang. And I wanted to talk to Greg about some of the biggest opportunities in the market. I want to do this, Greg, in the context of our halftime report that I did with Kristen Messerly, where, that was, I think it's about a month and a half old now. So I think some of the information is dated, but a lot of the information isn't. So I want to almost do a debrief on that report. You cool with that, brother?
Yeah, of course. It's good to see you. Thanks for having me. This is my debut here. I mean, I've been in the business 25 years now, and I finally made it on your podcast. So I don't know what to do with myself. I'm going to just try and control myself.
Well, dude, I've been in the business for 36 years, and I finally made it on your podcast, and it was pretty damn good. So thank you for that, by the way. I had a great time.
So we only have 50 plus years in this business behind us, and we're still in it, right? We're still pushing along. So there's
it's still loving it. I mean, that was one of my takeaways for the time that we spent together was, you're having fun, you're playing loose, and you're kicking ass. And I love that. So, and I love what you're doing, with influencers in the mortgage space. So this is the first time in our channel. So for anyone who doesn't know you, just give us a quick, give us a minute on how long you've been in the business and what your role is.
All right. So I've been in the business, like I said, going on my 25th year somehow, fell into it like everybody else, background in broadcasting. I'm the Chief Business Development Officer at NFM. I've been here 2 different stints over 25 years. So I started here for the most part in 1998. 2002, I opened up my own organization, grew it to 120 employees, and took 106 of them back with me to NFM 13 years ago. We just celebrated a couple of days ago, 13 years back the second time around. So I'm 51. Half my life has been spent in this organization. I'm responsible for marketing and recruiting. And, I sit in on all of the meetings of substance here that relate to our future and growing NFM and kind of where we're headed. So I'm like more on the creative side than anything. And I love recruiting. That's definitely a passion of mine. And I can jump in and out of that, whenever the time calls for it. But I would say marketing is kind of in my blood, marketing, broadcasting, and kind of merging it all together, which I've been able to do through NFM TV and now through the influencer division, which I know we'll get into. So there you have it.
Cool. Well, there's no doubt your background in broadcast came out in the interview that you did with me and Mark Cunningham. I love that interview. Thank you for that. So let's do this. When I did that 2022 halftime report, it started as me trying to plan for Mortgage Coach and Sales Boomerang and wanting to get a sanity check. Like, hey, let's talk to some top executives and some of the best loan officers in America, and just do some planning for the year. And hearing that you're in the C-suite over there, what did you think of that report, first of all? Because you did read it. Any takeaways that you have from it, or any thoughts?
Well, I watched a lot of the videos.
Oh, did you?
Yeah. And so, I found a lot of value in it. I think I went out of my way to tell you and your team just how invaluable it was to bring that kind of expertise to the market. It was free. It was very thoughtful. It had a little bit of everything. So I was blown away by it. In fact, I thought that it was something you could even charge for. Really, it brought that much value to the table. So that's when I really opened up my eyes and went, oh my goodness, this is incredible. And more people need to watch this. I mean, you've got executives from various companies, Fairway and others, that took part in that and just laid it all on the table. And, really what I walked away with was a feeling that we're all kind of in this together. I mean, we're all fighting our own fight, but we're also protecting the IMB. And I really got that sense and that feeling, sort of, that nothing was off the table, that everyone was willing to share their best practices and their opinions on the market, which I think is a perfect segue into what we're doing over here. I'm holding on to something in the influencer division that really was not brought into that halftime report. So that's probably a perfect segue into what we're doing. And
well, let's do this. I want to, first of all, anyone's watching it, I'll put a link in the description to this report. we were really thoughtful in like, hey, what are the data points and trends? And one of the things we're going to talk to Greg about, it's when you go through the data and you look at the affordability crisis in America, you look at the amount of equity in America. I mean, there's some things that are really tough about lending right now, and there's some things that are really great about lending. The demographic shift that's taking place in America, the Latino housing boom, there's just some massive opportunities where I want to go with you, because one of the chapters was strategies and opportunities. We talked about big data, and obviously sales boomerang is part of that. You guys are a customer. We talked about conversion, but here's what I want to go with you, Greg. And I think it tees up to your expertise, using video to connect at scale. That was a chapter in this halftime report. I guess let's just go right to that. Why are you making video at scale, such a priority for you personally and for your company?
A great question. So about 6 years ago, I approached our founder and CEO, David Silverman, who obviously knows of my broadcasting background, and said to him, look, people are using video, but they're not using it to its full extent. It's not polished. And not to say that all video has to be polished, because there's a lot of organic value in just holding up the phone and sitting in your car and talking, right? But I saw too much of that and not enough of this. Not enough of this studio. I've seen enough of that guy. So just take that part out. But, we've built a studio that you've been in yourself. And, I presented this idea of being one of the first mortgage lenders to build a studio about 6 years ago, so that we could really turbo how we appear in public when we want to be public facing and make it look a little bit more polished than just the phone. So they bought into that, and we built this facility. We probably put $500,000 into it. That was very generous, and they really took a leap of faith with me to do that. And for me personally, with a background in broadcasting, having grown up in a broadcasting family and been a broadcaster in the sports realm, it was kind of selfish in that way. So you asked me from a personal standpoint, I felt like this was a great way to marry my background in broadcasting with the opportunities I saw in the mortgage space to present a more polished version of everyone that wanted a piece of that. Again, not to say there's anything wrong with the authenticity of picking up your phone, because there's a ton of value in that really speaks to these other verticals that you and I are going to get into, like TikTok and YouTube Shorts and all these other things. So NFM TV has been around for 6 years, like I said, and we do an NFM salute every month where we honor a veteran. We've not missed one. We donate $2,500 to the charity of their choice, and we tell some really compelling stories. So that was that, and that really worked. Fast forward to about 16, 18 months ago, I started seeing this emergence of mortgage folks with NMLS numbers that were out there doing mortgages on TikTok and these other verticals. And some of the videos were getting 500,000 views, 1 million views, 2 million views. So immediately I started to think to myself, putting on my marketing cap, wow, if they're getting this kind of audience, there is opportunity in here. And what this screams of is folks in that younger demographic that are coming up, the Gen X's, the Gen Z's, where they want a piece of this and they're willing to go direct to consumer just based on trusting their influencer. So I brought in Scott Bentley, who's that mortgage guy, to help me with this idea. Convinced Scott to come to NFM about 16, 17 months ago. It just started as an idea, Dave, this influencer division, and we launched it, and we now have 11 influencers here, and we're generating over 3,000 exclusive mortgage leads a month from that. And the data behind that is super strong. About 80% of them are 24 to 34. 97% of them want to purchase a home. 87% of them don't have a real estate agent yet. 92% of that 87% want an introduction to an agent. So we're literally sitting on a gold mine here. And we've had a 16, 18-month head start. We built out a bunch of systems behind it. But yeah.
So what I want to do for a few minutes here is just have you give some free advice to anyone watching it in our channel, in terms of what do you see the difference between let's just call it mortgage and financial literacy influencers, because I put them kind of in the same category. There are influencers out there on TikTok, YouTube, that are creating content with the goal of monetizing that. Don't want to get into too many of the specifics, because remember, I always like to keep mortgage coaches a recruiting free zone. So I don't want to get into the nuances of what you're doing, but I want to get some best practices for any mortgage person that's like, hey, I want to build my audience. I want to get more eyeballs on the content I'm creating in Instagram, TikTok, and YouTube. What are some of the biggest do's and don'ts? What are some of the biggest mistakes you see out there? And what are some of the things that the people that are killing it, like, they're doing right?
That's a lot of questions. Let me unpack all that. I think the number one thing is just be authentic, be yourself. Don't, I hear this from Scott and other influencers that are successful a lot. Don't care about what you're putting out there. Just be true to yourself, and don't overanalyze. Do I look good? Is my hair right? Do I have enough makeup on, or am I wearing the right outfit? Don't worry about that. Just be yourself and build that community. So I think one of the pitfalls would be someone that doesn't do that, right? Someone that thinks too hard, too much, is too critical on themselves. The other thing that's really essential is not leaving any borrower behind. And I see it over your shoulder there. But we had that on our PowerPoint about a year ago. So I'm not sure who came up with that first, but no, it's just kidding around. But we stand for the same. We stand for the same. Of course.
Good with you.
That's what we're trying to do, and that's what is really essential. Be it NFM or the company you're with right now, is make sure you've got the back end to be able to service every single one of these people, whether they have a 500 FICO or an 800 FICO, it does not matter. And most importantly, those folks that are sub 580, where maybe your lender doesn't have a product for it, don't leave them behind. These people are much closer to purchasing a home than you think. They just need a little literacy. They need a little education. They need some coaching. Take the time to nurture those relationships, because that's what that demographic, 24 to 34 first-time home buyers, that is what they're yearning for. And that is our responsibility to them, to be able to coach them along and get them to a place where they're ready to buy. So on one hand, people hear me talk about, real quick, Dave, I just want to, let me clarify one quick thing. On one hand, you'll hear me talk about the amount of leads that we're developing. I don't say that to puff my chest out. I say that to say that we have 3,000 opportunities every month to not leave somebody behind. It's not about the number of leads. It's about, are you able to nurture every one of those relationships and put them all in a position to realize their dream? And that's really what's at the core of what we're trying to do.
So I want to really put an exclamation mark around one of the things you just said, because there is no doubt there is a affordability crisis in America, and there is no doubt that there's a financial literacy crisis in America. And I did an interview yesterday, and I'm actually kind of disappointed with myself that this is the first time where I showcased a loan officer that specializes in CRA loans. I've really focused on looking for loan officers that do the most loans, have the most volume, are the most successful. After doing this halftime report with Kristen, it made me really think about, what, we need to lean in to finding people out there that don't think they qualify for homes. They don't know that they can get a home, and helping them, achieve home ownership. So I do want to shine a light on this. This is an interview. Actually, Jeff is in your market. He works for Fulton Bank, and he does about 10 CRA loans a month. But I just want to, I'm going to put a link to this down below. Check this out. It's my first interview where I'm looking for loan officers that are really addressing the affordability crisis, and they're helping underserved markets. They're truly leaving no borrower behind. So if you're watching this and you know someone that is, killing it this way, I want to know about it. Also, one of the things I loved about it, from a self-serving perspective at Mortgage Coach, is he walked through in detail and made a case that using Mortgage Coach with CRA buyers saves time and is really valuable to the education process. And those kind of buyers take more time. He said, like, hey, they take 2 to 3 more touch points than a regular loan. So check that out. Anything else you want to add to the whole no borrower mission, and just call out to other loan officers and other mortgage executives on how we can do better there?
Well, thanks for asking that question. So we've had obviously a big lump of data to peel back since we launched the influencer division, and 35,000 customers we've been in front of as a result of this. So we've been able to look at it and take a really deep dive into it. The one thing I want to say is that because of the nature of the age, again, 24 to 34, the majority of the people, the vast majority of these folks that don't qualify right now due to FICO, it's not because their credit is a train wreck. It's not the traditional bad credit, for lack of a better, saying that we're used to. It's underutilized credit. It's people that don't have enough trade lines, or they're just carrying student loans and they're just starting to establish themselves on their credit journey. So I'd say 8 out of every 10 credits that we look at in this segment, it's not that they even have lates. It's just they don't have enough established credit yet. So in comes the coaching to let them know, here's what you need to be doing. And that is where that nurturing comes in, and taking the time to identify why they are where they are, what they're lacking. And oftentimes it's trade lines, or maybe one collection that they've just ignored because nobody told them, hey, pay that off and your score will go up a considerable amount. So the one message to the other people in the C-suite and everyone else out there is that just because a third of these consumers that we pull in, of the 35,000 or whatever, are below 580, some of them are so close to qualifying. Don't be turned off by that. They're just 2 trade lines away and one cleaning up of an infraction in the past that's minor from being in a position to buy a home tomorrow. And so just being able to plug into them, breathe some life into them, and know that you can take it to the finish line sooner than we're used to traditionally is really exciting. So we're basically worth your time to plug into and invest.
Yeah, so I got 2 more questions before we wrap this up. So is that what, because you subscribe to both Sales Boomerang, Borrower Intelligence. So when a borrower's FICO score goes up X, when people get into the money from a refinance or move down standpoint. And then you guys also use Mortgage Coach. Do you feel like those 2 tools help power that capability so that you can have that focus, make that commitment, and how you use data, how you use CRM, how you use Mortgage Coach, it's like it's powering that value prop? Do you feel that way?
The cost analysis we can't live without. Most of the biggest producers in the world can't live without it. So, I think people know that the total cost analysis is money, it's gold. And we use that on the front, Sales Boomerang. We use more on the back once we've closed the loans to monitor the movements of these folks. So we're just getting through the first wave of closings. It's been a year. And so, yes, we're using both, and we love them both. I don't think we'd be where we are without them.
So one of the things we're working on with Boomerang is just adding more and more value to that pre-approval funnel, so that because the pre-approval funnel is grown, it's bigger. People go from I want to buy a house to they're actually in escrow buying a house. It's longer. How by the way, I'm curious, with your influencer division, and you guys are creating content, you're probably getting to people even sooner than a typical loan officer would get, because usually a loan officer gets to it when a realtor makes a referral, or
Right.
someone raises their hand. You're getting to these people when they're just like on social media learning about it. Any trade, well, I'm not going to ask you for secrets because I'm sure you have some proprietary things that you do, but any advice you have, because I think you are uniquely positioned to give some really good advice on how to manage that pre-approval funnel, because you probably have a bigger one than the typical company or division.
Oh, there's a lot involved. You have to be able to obviously collect the data and then parse it out so it goes through meaningful journeys based on where they are. And some people are hearing me and they're going, oh yeah, I understand that. And some are like, what do you mean? But basically when you take somebody in, you have to be able to identify where their biggest needs are and what they're ready for now and what they're ready for later, and put them on that right track. So there's a lot that goes behind the scenes to getting that done. And that's the proprietary stuff that we've built that I won't get into. But in terms of, you make a really astute point, Dave. And that is that this is earlier in the funnel than anything anyone has ever seen. They don't even have agents yet. Right now, it's just an idea. They've been inspired to maybe want to step out and buy a home. So one thing of note is the average intake to close, which is valuable information, is about 90 to 120 days. So from the day we take that lead in until we close that borrower, it's about 90 to 120 days.
Okay, well, first of all, thank you for that. Big call out to the entire industry. We need to do a much better job of incubating and delivering financial education to folks in this future. We're no longer in the days where rates are in the twos and we can sell rates and transactions. We have to solve problems. We have to educate folks. So another really big takeaway, and this is the last question because I want to respect your time and what you committed to me. But one of the recommendations Kristen and I made after doing all the interviews is that the lending industry we need to stop thinking of ourselves as loan officers and transaction coordinators, and we need to be the captain of the wealth team. And that we're really well positioned as an industry to be the most valuable advisor to a consumer, more valuable than a CPA, more valuable than a financial planner. And I know you know this, and I know you believe this, but how do you guys execute on this? Give me some thoughts on how you're creating a platform and how you're leading people so that they're the captain of the wealth team.
NFM globally, or just the influencer division? Because they are two. Yeah, I mean, they're two very different answers. Obviously, on the NFM globally side, on any lender, you have to coach your loan officers, and you have to have the tools to help people see the bigger picture. The difference between that and the influencer division, which we just noted before when talking about the journey and how long it takes to close, is we are getting to these people in their infancy. Traditionally, like you said, the agent hands us a lead and maybe it's their third mortgage, their fourth mortgage. They already have ideas in their mind about how they're going to manage their wealth. Certainly they're open to some suggestions, but over here in the influencer space, it is in its rawest form. So, and I just demonstrated what it takes to get somebody ready, even someone with a below 580 FICO. So I think it's a very different experience for a customer that comes in from an agent that has a 780 FICO and has 20% to put down all day long. It's vanilla and they just get referred. These people are obviously on their way. Over here in the influencer space, you really have a chance in the beginning stages to build this relationship, to build an understanding of what it's going to take to get into a home, to build their wealth through their home, to show them how houses appreciate historically, and how this can be their biggest, most valuable asset. And then later on in the journey, if they want to have second homes or investment properties, we've got experts there too that can speak to that. Obviously, that's further down the road. But my point to answer your question is, it's very early on in the process. You can't get any earlier on than what we're doing in the influencer space. And that gives us the best chance to have a customer for life. They will never forget it. You're talking about some people that never dreamed of getting into a home, and they put their faith into us beyond all expectations and their wildest dreams to be able to deliver that home and to be able to give them those keys. And if we can develop that relationship in the beginning, then we'll get the refinances, we'll get the purchases of their families. And so in that way, it's so exciting. It's so exciting, Dave, because we're the first stop on the block for them. Just imagine that, as opposed to a lead from a realtor where someone maybe has bought 3, 4, 5 houses already. If you think about how powerful that is for a minute.
No, I was just going to make sure we all pause and think about that, because I think when all of us in the industry think of the client for life journey, we think of got to have a CRM with automations. We think of got to deliver, you got to have borrower intelligence so that you're alerted to these opportunities. You got to deliver a great presentation. But you just made the case. We need to have all those tools to execute, but we really need to build out this educational platform that educates people into home ownership. And when you have it all, you're right, you will create clients for life if you were part of that emotional journey from the, when they started thinking about it. And that brings up a really good point. In Sales Boomerang, one of our sales slides, we show the lifetime value of a customer, and it's extraordinary. Like most people, buy multiple homes, do lots of refinances. I mean, over the past 5 years, it's crazy to think how many times people have refinanced. But the lifetime value of the consumer is tremendous. So, brother, I've taken more time than I asked for, so I want to be respectful. But any closing thoughts? Anything you want to share before we wrap up our time?
Just that this is an exciting time to be in our business. It really is. And I know a lot of people are out there freaking out right now and wondering what's on the other side. But in my 25 years, I know I look like I'm only 30. So in my 25 years, Dave, every single one of these moments has been the precursor to something really phenomenal around the corner. So that we just have to remember that. If you're newer in the business, keep your head down, keep building those relationships. Take this time to put tools like Mortgage Coach and Sales Boomerang in place. Take this time to clean up your act, clean up your house, make sure you've got the right partners in place so that when you do turn the corner, you're going to be able to blow up in a really substantial way. That would be my closing thought. To those people out there that haven't seen this movie that you and I have witnessed now over a combined 56 years or however long we've been in the business.
Good. Well, hey, thank you for your time, guys. Make sure you follow this guy on social media. If you got value from this, give it a like, subscribe to the Mortgage Coach YouTube channel. I will put a link to the interview that he did. He flipped the script on me about a month ago, and it was such a fun interview. I can't wait to do it again. And thank you very much, brother.
Yeah, we fist bumped right here in this chair.
Yeah, no, that.
Yeah, you got it.
I just moved my arm like this, and he's like, "Oh, you want a fist bump, don't you?" And I'm like, "Well, I kind of did."
We're kindred spirits. It took us a long time to get together, but now we're married. So I look forward to doing this again.
All right, I look forward to it, man. Take care.